As we round out the year, we're going to take a look at some of our big winners, do some trading, looking at the options and the fundamentals for Nvidia and Tesla. Joining us from New York Stock Exchange, Melissa Otto is the head of TMT research at S&P Global Visible Alpha. Melissa, thanks for being here this morning. Let's start with some Nvidia. The share's back above 140 bucks, but kind of been a sleepier second half of the year compared with the first half and last year. Tell me what you think happened here. Did things just kind of take a little bit of a break?
Happy holidays. It's great to be here. Thanks for having me on today. I mean, Nvidia is at an interesting point in its potential momentum. Coming into the first half of this year, there was a lot of acceleration in demand for their chips. Coming into the second half, we started to get questions about Blackwell and what the direction of Blackwell was going to start to look like. The company guided to several $billion in revenue in the fourth quarter, but then the market has started to look to next fiscal year and where the momentum is really going to start to accelerate into the certain quarters. Now, there's a lot of debate out there about how Blackwell is going to start to shake out and what that acceleration trajectory is going to really look like. And that's why we've seen that.
What are the potential outcomes for Blackwell demand? Do you view them as being largely positive? Is there a wide range of tail risk outcomes, or is this mostly a forecasted, visible demand?
When we look out 2 years, there's over $100 billion range in the estimates. So there's clearly bulls and bears out there. Looking out to next year, there are analysts that are clustered at or below 40 billion in revenue for Blackwell and at or above 100 billion for Blackwell. And that tells me that if you get consensus that is trending either well above or well below those expectations in terms of where the numbers are converging, then I think we could see some volatility in the stock.
Good numbers to know, to have on our mind. We're going to talk some Tesla here. Hang with us, Melissa. Tom, jump in the conversation here, Mr. White. Looking at options for Nvidia and the range it's been in, I think to Melissa's point here about now it's like, time to see next year, really, if all those orders come to fruition and everybody does line up, and does it change based on what happens in the economy, or is it all like secular demand? Maybe that's why Nvidia's been kind of range bound. Right. How has that range affected the options trade in it?
Well, implied volatility levels down. IV percentile rank is below 25%, so it's in the bottom one.
Really cooled off.
Yeah, well, that's what happens when you rally over 3% the last two sessions. So we've seen some gains, and that's pulled back on implied volatility. So I looked at an option strategy that takes advantage of lower implied volatility for a directional bias. If you think this thing's going to rally into earnings, which are mid to late February, this strategy takes advantage of maybe a move back to all-time highs, like a lot of the other Mag 7 stocks have hit their recent highs. So if you do get that reacceleration over the next maybe month, 5 weeks or something, this takes advantage of it. Going out to the January 31st weekly options, 38 days to expiration on this one. I'm going to buy an at-the-money 140 strike call and then against it because I want to offset some of the risk on that position of the long call. Sell the 155 strike call. $15 wide bullish call vertical here. Paying roughly about a 550 debit on it. Maybe a little bit higher than that, maybe 570 or so. Okay. The debit you pay is going to be your risk. Your break even 145.50 over the next 5 weeks or so. That break even is only about 3% above the current share price in there. And if it does go to 155, that's only about 10% above the current share price in there. So looking for moderating movement to the upside where it grinds higher, and that low implied volatility allows you to get into this position that's bullish at a cheaper price.
All right, you're not asking for much, just a little drift further back up into the 140s. For Nvidia, which doesn't seem like too much to ask by the end of next month, right? Jan 31st?
Jan 31st, 38 days,
All right, nice, like that. Melissa, when it comes to Tesla versus Nvidia, how wildly different are these companies in terms of to take your guys' label, the visibility of their earnings?
Based on Visible Alpha consensus, I think the critical story here for Tesla is the Cybertruck, and based on consensus,
Really?
Cybertruck numbers are expected to triple, and so there's been a lot of discussion around, is that going to be a potential catalyst into next year? I think that's something that we're taking a look at.
Wow. So Cybertruck playing a big role. We hear so much about all the robo stuff. Is that all too futuristic? Is the Cyber what's going to move the needle on actual current sales?
And that's what I see in the numbers. When you see a number that's coming off a fairly low base and essentially tripling year over year, it's a signal potentially that it's a product category that could potentially break out.
Okay. Seems like the truck has been fairly well received. You a believer in the robo valuations and stuff? People saying that Elon's saying we're going to have Android like 2 per person in the future. Like, how much of that stuff is all hype?
I mean, it would be great to have some sort of a robo bot or somebody, clean up after the holidays and deal with some of my holiday shopping. I know it's made me extra busy this holiday season.
Yeah, true. Let's hurry up, Elon. Give me that shopping bot. Thanks, Melissa. Appreciate it.
Thank you.
Tom, tell me about the options in Tesla here.
Well, the flip-flop, even though the stock's moving, it's up over 4% today. I don't know why, but keeps on pushing to the upside. Yeah. Implied volatility levels are actually elevated. They're rising even though the stock is rising. So that opens up the door for maybe some option strategies that maybe a little bit more conservative, giving myself cushions on this one. The stock has moved up about 80% so far this year, just below those all-time highs we hit last week. So I want to take advantage of that higher implied volatility. If you're still bullish on this name, maybe this is a way to play it to the downside where you're selling a put vertical to take advantage of a neutral to bullish type stance. I went out to the January monthly cycle here in Tesla, selling the 420 put out of the money to the downside, and then because I want to stay risk defying in a name like Tesla, buy the 400 strike put, so a neutral to bullish $20 wide short put vertical collecting. I've got a $7 credit on here. That's where it was trading earlier. It's probably trading closer to $6 right now. But that credit that you collect is what you can make on this position. But by collecting $7 credit on a trade like this, it takes my break even all the way down to $413. That's about 7% below the current share price in there. So you profit in 3 out of 4 scenarios in this one. Stock keeps going up, you get to keep that credit. Stock stays where it is, keep the credit. Stock goes lower but remains above that 413 break even. You can be profitable on this trade over the next 24 days. Got 3.5 weeks. IV percentile rank near 80%. So as the stock has moved higher, you're starting to see that call skew start to gain some momentum as people are reaching for upside calls here in Tesla, which causes implied volatility levels to expand. That allows you to collect more option premium on a neutral to bullish type of short put vertical that we have here in Tesla. So, might be a little bit more conservative, but at the same time, maybe you want to be in this name that's rocketed to the upside. Selling
downside instead of buying upside.
Yeah.
The difference in Nvidia versus Tesla trading now. I think that makes sense.
Yeah.
Thanks, Tom. All right. Appreciate it. Thanks, Tom White. Thanks, Melissa Otto.